We all know that because of the power of reinvesting them, dividends are return accelerators. But Hayford needed a quarterly checks. Reinvesting is just fantastic, but I can't afford to do it, said Hayford to a reporter. In 2017, his portfolio was composed of exactly 12 high-yielding stocks, a bond, and an annuity. 3 were common stocks: Altria, Johnson & Johnson, and Philip Morris International. 9 were master limited partnerships: Allianz Resources, Bridge Energy, Energy Transfer, Enterprise Products, Energy, Kinder Morgan, Onyok Partners, Plains All American, and Suburban Propane. 1 was a bond and 1 an annuity. That's it. In total, from 1995 to 2017, Pierce's dividends alone had paid him more than $1 million. $1,148,079.84 to be exact. That's $49,916.51 per year on average. His investment in Altria is a particularly incredible story. Hayford began buying shares of the tobacco company back in 1987. Over the years, he kept buying more. In 88, 91, 96, and 97. And eventually accumulated 11,000 shares of Altria, then known by the more familiar Philip Morris name. Every time there was a panic in the market about Philip Morris, and it would go from $70 down to $20 because of a smoking case, I would go out and I'd buy some more, he said. Because of several spin-offs, his original 11,000 shares of Altria stock turned into an astounding 11,000 shares of Altria, 7,000 shares of Kraft, and 11,000 shares of Philip Morris International. This obviously doesn't mean that I'm suggesting you buy stocks of a tobacco company, but it just comes to show the power of dividend investing when applied to companies that also yield long-term growth. And Hayford got that result without ever adding principal and without ever reinvesting his dividends. The beautiful thing about long-term dividend investing is that this beautiful 2, 3, or 5% dividend yield that these stocks give actually represents a much better dividend yield if you calculate it on the sum you actually paid on the stock originally. In 2018, Hayford measured his dividend checks of Altria against the original cost basis that he paid when he bought the company, rather than against the current share price. By then, Hayford was getting a 37% yield on Altria and a 28% yield on Philip Morris International. Imagine making a single investment in a dividend stock and 20 years later, it's giving you 30% of your original investment every single year in dividends.